Welcome back. Allow me to thank all the speakers of our prior panels and congratulate them for such an amazing presentation. I have to say that we were overwhelmed with questions that they were coming from our participants, and we would need many hours to address. But as Katerina Savaidou mentioned before, there are a lot of important advantages and also specific conditions and deadlines. If you need advice for your personal issues, our speakers, their contact information will be available on the site of the Hellenic-American Chamber of Commerce, and the whole forum will be up starting tomorrow. And now let's go into our panel that addresses real estate opportunities and taxation, tax-free limit for transfer of assets to family members, Enterprise Greece, and Golden Visa. I'm very pleased to introduce to our audience our three panelists. We have with us George Kormas, the Executive General Manager and Group Chief Real Estate of Piraeus Bank, Piraeus. We will discuss with Mr. Kormas the state of the real estate market in Greece and opportunities of investing. We have Mr. George Filiopoulos, the CEO of Enterprise Greece. Mr. Filiopoulos will tell us about how Enterprise Greece matches investors with investment opportunities in Greece, and will touch upon the investments made under Golden Visa and the positive effect they had on real estate in Greece. We also have Ms. Marina Allamani, who is a tax partner of Zepos Yannopoulos Law firm. She will speak to us about taxation related to buying, selling, or owning real estate in Greece. She will also talk to us about transferring real assets to family under a recent voted law, and it's what we call goniques parοχές in Greek. We will have a discussion with Mr. Kormas and slide presentations from the other two speakers. At the end, we will have a panel discussion with questions from our audience. And without further delay, I'd like to start a conversation with Mr. Kormas. Mr. Kormas, in addition to being the Group Chief of Real Estate, Piraeus Bank, he's also a member of many executive committees at the bank and the CEO in subsidiaries. He has served in the past as advisor to the governor of the Bank of Greece and has worked for the European Central Bank. Full CVs of our prominent speakers can be found at the Hellenic-American Chamber site. Mr. Kormas, welcome to our panel. You are our expert on the real estate market and the investment opportunities that it represents. We all know that the values of real estate assets and the real estate market as a whole are interconnected with the state of the economy. And you have lived through the economic crisis, and we have seen valuations of properties to sink sometimes 75% from their original valuations. But the present government's economic policies, even with a slowdown due to COVID-19, have already resulted in unprecedented numbers of growth for the Greek economy. So with such optimistic perspectives about the economy, what is your feeling about the future growth of the real estate industry in Greece? Could you give us a brief overview, please?
Good afternoon, Ms. Pylarinou and distinguished panelists as well, and everybody that is following us online right now. I would like to start by thanking the Hellenic-American Chamber of Commerce for this opportunity to speak and give my opinion on the real estate market. As you correctly already stated, Ms. Pylarinou, the country has suffered a severe financial crisis that was not definitely related actually to a banking crisis, but it then resulted to a banking crisis as well. So now we have a country exiting this 10-year severe crisis, and in order to associate myself with the rest of our of the people who are following us right now. I myself returned back to Greece back in 2011 in the middle of the financial crisis, and I lived, and I since then live there and really experienced the outcome of the crisis. Since 2018, the entire situation started changing, and indeed the new government has created the institutional framework that is needed in order to exit in a different way a crisis of that dimension. What I mean to say by that is the following, that I will exclude COVID-19 effects right now, and I will talk to you more generally. So since then, since 2018, due to the economic recovery, the environment has become more friendly for investors and investments in real estate. Real estate is directly correlating to the gross domestic product expansion. And since we are experiencing a growth right now, this is definitely affecting the real estate prices as well. Obviously, and as we all know, there has been the COVID-19 crisis in between. Nevertheless, for the real estate, at least for Greece, but for other regions as well, has had an effect only in the number of transactions that have been taking place and not on the asset values. What I mean to say by that is that since the recovery started and with a positive GDP and growth outlook for the entire country, it goes without saying that there is only way, and this way is up. We have experienced prices recovering from decreases between 40 and 60% in the 10-year financial crisis. We have not yet reached the before crisis level of prices, and there is still a way there to go. But nevertheless, this is the direction, and the positive outlook is the only way I could describe in a way the development on the real estate market.
There are different types of real estate investments to be made. You can be an active investor or a passive investor. You can invest in office, industrial, or residential assets, or even hotels. Can you give us your expert opinion as to the expected returns in each one of these types of investments for investors?
I will start by stating and making a comparison that may be very beneficial, or at least is very beneficial in my eyes, in the calculations and the investment planning of our distinguished guests and the people who are following this panel. And I would like to say the following. Investing in real estate in Greece is currently the best way somebody can approach a real estate investment at the European level. Why do I say that? The reason behind it is that because of the 10-year deep financial crisis, the entire market has been left undervalued, whereas the rest of Europe has entered a real estate circle, and now they are exiting this real estate circle, meaning that if we make a European comparison, like for like, Greece is at the beginning of an expanding real estate crisis, whereas the rest of the European countries are now reaching the end of this very same circle. What I would like to stress at this stage is the following, that Greece is in the very lucky situation that successfully managed the problems that were relating to Brexit and similar, as you can all recall, back in 2015. The reason that we are now discussing about real estate opportunities in Greece is because Greece managed to stay and be a member of the European Union, and in particular of the EU area. I don't like to draw any direct comparisons, but we all know that there had been enormous real estate opportunities for investing in countries, in neighboring countries to Greece. We are now all following on the news what is happening with these countries at the financial level at the moment. What I mean to say by that, one of the most important things in investing in general, but in particular as well in real estate in Greece, is the political and institutional stability that is now given, which helps all investors to correctly assess any risk and obviously compare apples with apples within the European Union and make the right investment decision. Just to give you an example, logistics, which is a hot topic at the moment and highly traded, for a potential investor coming outside Greece, the only reason, not the only reason, the way to make the comparison, the investment decision, is the following: that you do have and earn a better yield in Greece compared to a logistics center somewhere outside Berlin or outside Paris or similar European capitals. There is a spread there at the moment that reaches almost 4% between similar investment projects. So I see no reason why not come and invest in Greece. Okay. The same applies, obviously, other hot rated sectors of real estate are residential real estate, which is upcoming at the moment. And after a 10-year of no new developments, we now experience new developments as well, which will be added to the existing stock that is already on the market. And obviously then offices. Grade A offices. I'm talking about grade A offices. It's a very good example of the Greek real estate market. I would like to to make a small remark on that the Greek real estate market doesn't necessarily have the depth of other markets like the US market, for example. As of that, this creates either shortages or oversupply of certain asset types. As with regard to grade A offices, for example, there has been a shortage before the start of the rally that we are now experiencing in real estate, because there hadn't been any new developments. And another important aspect I would like to add here, which applies for all real estate asset types, but mainly for offices and logistics and industrials, is the approach that the European Union in general applies to all future developments, meaning that we are all practicing under the sustainability principles and circular economy as well. And for buildings that are certified according to international norms that do specify and guarantee that those principles apply, are scarce at the moment. So if I were to give an advice, it would be to invest in buildings or real estate that does follow this principle and has these certain stamps or rubber stamps of either LED or DGNB or similar norms that do certify that. This is the future of real estate, along, obviously, and hand in hand with the digitalization that takes place in other areas of the economy as well. And obviously real estate, although it may at first glance seem to be not necessarily something to associate with digital, it is not the case, and it is something that unavoidably will be part of it, is already part of it.
Okay, I have a lot of more questions for you, but we need to move on to the next speaker. We'll come back at the panel discussion. Our next speaker is Mr. Filiopoulos, the CEO of Enterprise Greece, Greece's national investment and trade promotion agency. Before serving in the public sector, Mr. Filiopoulos worked as a business executive for various companies and organizations in the US and Greece, and he is well prepared to address the challenges of attracting investment.
Good afternoon, Ms. Pylarinou, and good afternoon and many thanks to the organizers of this forum on the tax incentives that Greece offers, and of course to all of you for joining us. I have a short presentation to share with you. Is it on the screen? It is on the screen, yes. Right? All right, excellent. And let me say a few things about our organization, Enterprise Greece. Enterprise Greece is very often the first point of contact for foreign investors who look to invest in Greece. And we also manage the Fast Track program for strategic investments and the Golden Visa program. At Enterprise Greece, we provide a one-stop shop for investors. And following international best practices and working with all relevant stakeholders, we provide a set of integrated services. And we take an investment from the initial planning and scouting stage all the way through full implementation. We maintain a portfolio of existing investment opportunities, and we'll also consult with investors to find the project that best suits their needs. For greenfield projects, we will prepare customized investment proposals. We will provide up-to-date information on licensing and regulations. We will assist with location scouting and with HR in Greece. Now, we are the bridge between policy and practice, and via this role that we have, we listen carefully to our stakeholders and act as advocates at the policy level, suggesting changes in the legal framework for investments. Greece has become a very attractive investment destination by global standards, and we have seen several dozen major multinationals invest in our country in the last 2 to 3 years. In this context, I would like to highlight our carefully scouted and researched investment portfolio, which, as I said, is relevant both to companies and to individuals who would like to establish residence in Greece. Potential projects go through a careful vetting process. If accepted, we gather all the necessary material, and then we sign an NDA with the project owner to protect confidentiality. Then, Enterprise Greece, my colleagues and I, will package the project for presentation to potential investors. Now, if an investor is interested in pursuing a specific project, we act as a matchmaker and introduce the two parties. The entire process ensures maximum confidentiality to all parties, and the final negotiations are exclusively between the project owner and the investor, and they do not require any involvement by Enterprise Greece. We are only get involved if both parties ask us to get involved with a specific purpose and specific goal. Naturally, however, we are always available to consult with the investor regarding any questions or issues that may come up. Now, when it comes to establishing residence in Greece, the Golden Visa program is one of the main avenues for non-EU nationals to establish residency in our country. So far, the program has attracted significant residential real estate investment, with applicants buying more than 1 billion of real estate, mostly in and around the area of Athens. At the practical level, the Greek program is particularly generous, allowing investors to obtain residence permits, not only for themselves, but also for their extended families. It should also be noted that in spite of rising real estate prices in Greece, as Mr. Kormas said earlier, Greek real estate is still very well priced, especially compared to other European countries. Now, the threshold to qualify for the Golden Visa program is 250,000 euros, and investment in both greenfield and brownfield projects are eligible in addition to real estate investment. It is also possible to qualify through investment in intangible assets, but with that option, the threshold rises to 400,000. Here are the three options. Now, I think that in the previous panels, there was a discussion about established residence in Greece and take advantage of an array of tax incentives. We have a special program for foreign retirees, the new non-dom regime, the digital nomads, and so on. So from our perspective, Greece's economy is well positioned to attract global businesses and investments. And we are thankful to the Hellenic-American Chamber of Commerce and the International Chamber of Commerce for offering us this amazing opportunity to inform US investors. Thank you for your attention to this presentation. And of course, we welcome all your questions and all your inquiries for assistance with investment matters in Greece.
Mr. Filiopoulos, I would like to thank you for your excellent presentation. Now I'm pleased to call upon Ms. Allamani, who is a tax partner and co-heads the real estate practice of Zepos Yannopoulos Law Firm. She has extensive experience in real estate projects, and she regularly advises international and domestic clients on the structure of acquisitions and variety of tax issues relating to real estate. She's admitted to the Athens Bar, and she is also admitted before the Court of Appeals. Ms. Allamani will try to walk us through the tax considerations for buying, owning, or selling real estate assets in Greece. This is a very broad subject, and she has to take us through it in less than 10 minutes. She has prepared bullet points of the various Greek taxes during the life cycle of a Greek real estate investment. And we decided that the PowerPoint would be best and most useful to take us through so many various taxes. And Ms. Allamani will also touch upon the newly voted law of transferring assets of 800,000 up to 800,000 euros in γονικές παροχές, tax-free to immediate family members. Mrs. Allamani, the floor is yours. We can't wait to hear your presentation.
Thank you very much, Ms. Pylarinou, for the introduction. I'm very glad to be with you. Thank you for the Hellenic-American Chamber of Commerce and ICC Greece for the invitation. Let me share my presentation with you. Screen. Just one moment to solve the technical matters. And here we are. So my topic, my contribution in this panel is to discuss about tax aspects, or to rephrase it, what you need to know about taxation. My purpose is twofold. The first one is to present the main taxes that are relevant to real estate transactions and Greek properties. And the second one is to give some insight around the structuring of the holding of Greek real estate. Let's start with the Greek taxes during the life circle of the Greek investment. And it is obvious that reference will be made to the taxes upon purchase, during the holding period, and upon exiting. In terms at the time of the purchase, one would expect to pay either real estate transfer tax at 30.9% or value-added tax on transfer of new buildings at 24%, which, as stated by the previous speakers, is currently under suspension until 2022. During the holding, one may pay income tax or corporate income tax. He or she would definitely pay the annual property tax, the so-called Eftihia, which is assessed on the owner that holds the property on January 1st. And this would be the exceptional situation of the special real estate tax, which would apply only if no exemption applies. Upon exiting, there would be either a capital gains tax, again under suspension for private individuals, but still taxable in case of corporate entities, and gift or inheritance tax. Apart from the taxes and the tax rates, the very critical question is, what is the taxable basis? And here I think that what one needs to know and keep in mind are three things. First of all, the taxable basis is not always the same with respect to the various real estate taxes. The second one is the notion of objective value, zone value, or main tax basis. What is the objective value? Objective value, or αντικειμενική αξία in Greek. Objective value is supposed to compute the market value. It is determined on the basis of specific factors, such as the zone value, the age coefficient, the surface of the property, the floor, the age depending on the building permit, the commerciality in case of plots, or the proximity to the sea in case of agricultural lands. All these factors aim to end up with a value which is the taxable basis for a number of taxes. For the purpose of our example, we refer to two properties, one in the center of Athens at Kolonaki and one in the south of Greece at Peloponnesos. And just as an assumption and for the sake of the example, in the first case, the price per square meter is lower than the price per square meter in terms of objective value, whereas in the other case, the opposite happens. What you would see from the example is that in terms of real estate transfer tax, the tax is always imposed on the higher, be it the objective value or the purchase price. Whereas in case of Eftihia, supplementary tax and SRED, the taxable basis is the objective value. Especially when it comes to the main Eftihia, we have one value, one tax, which is computed as €1 per square meter. And such euro is determined again based on brackets and based on the zone values. Let's move to compliance. In terms of steps, prior to purchase a real estate, one would need to obtain a tax ID. He or she would need to file a real estate transfer tax return and pay the tax, to report the property in the E9 form, which is on the basis of which the annual Eftihia is assessed, and subsequently to file property income or corporate income tax returns. And let's go to the second section of the presentation. I will refer to certain structures that are the most commonly used for holding real estate properties, serving business or personal needs of the investors. For the purpose of the examples, we are referring to a US tax resident who is a Greek national or could be a Greek and US national, and he or she holds the property through various structures. Again, my references would be from the Greek taxation, from the country, from the jurisdiction of the investment. The first example has to do with the pleasure property, a property held for private use. In our view, the most straightforward holding structure for these types of investments is to hold it directly by the private individual. In terms of the life circle of the property, one would expect to pay real estate transfer tax or VAT, which is currently under suspension. Depending on whether the owner has other assets on income in Greece, he may find himself to need to justify the purchase price for pothen έσχες or deemed income tax purposes. The annual property would be the main Eftihia, which would be the same irrespective of whether the property is held by a private individual or a legal entity. The main Eftihia is the same amount and it does not depend on the owner. And the supplementary Eftihia, which is computed on a different way when the owner is a private individual or a legal entity. For private individuals, the supplementary Eftihia takes into account the total value of the assets of a private individual and it's computed on taxable brackets on the basis of progressive tax rates with an exempt amount and the higher tax rate being 1.15%. There would be no income tax for self-use of secondary homes. In case of exit, currently there is no capital gains tax until 2022, but it is our impression that this may be further extended because actually this exemption has not been applied for more than 6 years. In terms of inheritance and gift, a Greek real estate is always a Greek asset, so it would always fall within the Greek inheritance and gift taxation. I would like to refer to the recently introduced gift tax exemption, which is for a value of 8,000 euros. Actually, this has been implemented as of 1st of October, and it has resulted in a number of family transfers for the purpose of making use of these rules. And again, the critical question is that this amount is computed on the tax value. So if you discuss about a real estate, then it would be critical to see whether the objective value of the property is lower or higher than this threshold. And moving on to the passive investments properties, the reference would be to corporate structures. We will present 3 different structures, starting with a property held by a Greek corporation, a Greek Société Anonyme Orike. We would go through a similar structure whereby, however, the owner is a US LLC. And the third one would be a 2-tier structure consisting of both a Greek company and a US company. In terms of the Greek company, one would expect, again, real estate transfer tax or VAT. The corporate income tax rate currently in Greece is 22%, and the taxable basis would be the profits. While upon the distributions by the Greek company, a 5% dividend withholding tax would be due. The Greek-US double tax treaty does not eliminate this tax. In terms of annual property taxes, the main Eftihia will be due. The supplementary Eftihia for corporate entities and in case of passive income investments is computed at 0.55% on the objective value. And SHRED may apply if no exemption applies. This is a different matter that will give some insight at the end of the presentation. Now, upon exit, in case of an asset deal, the gains would be subject to corporate income tax at the standard corporate income tax rate. And again, the 5% dividend withholding tax would be due. If exit is as a share deal, in such case, no tax would be due in Greece. Again, in terms of inheritance and gift tax, the shares in a Greek company constitute Greek assets, and therefore they would always be subject to Greek inheritance and gift taxes. Let's go now to the US LLC. The US LLC would be taxed on income from a movable property in Greece on the basis of Article 6 of the Greek-US double tax treaty. So irrespective of whether it would set up a corporate branch or not, the income from the real estate would be taxed in Greece at the standard corporate income tax rate. There would be no dividend withholding upon remittance of profits, because this actually would be profits remitted within the same entity. And in terms of inheritance and gift tax, the shares in a US LLC do not constitute Greek assets. So under requirements, they can be exempt from Greek inheritance and gift tax. And relevant requirements have to do with whether the donor or the person passing away has been a foreign tax resident for more than 10 years outside Greece. Let's go to the two-tier structure. And I would think that this is the most commonly used structures that we see in our everyday, business life. Usually, the Greek property is held by a Greek SPV, and this is because it renders any future sale easier and more preferable. It is usually, and the reason for that is that any third-party investor is more likely to acquire the shares of a Greek company when it comes to a Greek asset. The Greek company is usually held by a US or an EU holdco, and the investor sits on the top of the structure. Again, the profits distributed by the Greek company would be subject to the 5% withholding tax. And in case of exit, be it at the level of the Greek company or at the level of the US company, there would be no tax in Greece. Again, if the asset to be inherited or be gifted would be still shares in a US company, and therefore not within the scope of the Greek, exempt from Greek tax under requirements, as we said before. And a very interesting topic is the rules for property-rich companies, and this is very relevant to the exemption of capital gains upon transfer of shares of entities holding interest in Greek real estate. What is a property-rich company and what is a property-rich clause? A property-rich company is a company that derives more than 50% of its value from Greek real estate. Greece, as is also the trend in all European countries and globally, has considered that when a company derives more than 50% of its value from real estate, such gain should be taxable in Greece. Nevertheless, although this clause has been introduced in the income tax code back in 2014, it has been under suspension since 2015. So in practice, it has never been applied, and the suspension would apply until 2022. It remains to be seen whether this extension would be further extended, and based on the government's remarks, the whole framework will be revisited from outset before coming into play. If relevant clause comes into play, then capital gains tax would be taxable at a 15% rate. It is uncertain whether a similar treatment would apply to corporate entities. In our view, this shouldn't be the case. But if it were, then the 22% corporate income tax would apply again. Greece USTTC does not eliminate Greek capital gains tax. It would eliminate, however, corporate income tax in case of legal entities, since this would qualify as business income rather than capital gains. Two more things, two more items that are very critical upon discussing of Greek on matters of relevant to Greek taxes on real estate. The first one is the special real estate tax. This is an anti-avoidance tax, so no one is supposed to pay it. Everyone should proactively review the grounds of exemption and see whether they can qualify or not. When it comes to passive income investments, then the disclosure exemption applies. This would require that the whole structure is disclosed and that the UBO, the ultimate beneficial owner individual, would have a Greek tax ID in Greece. Another element is the VAT. It has been referred also by other speakers that there has been a suspension of VAT on new buildings until 2022. the VAT is a significant element in the sense that the rate is 24% and therefore is a significant cost for those taxpayers that they are not entitled to set it off. So in principle, a business entity carrying vatable activities, including the renting of commercial properties, would be entitled to offset VAT. And here my presentation comes to an end. Thank you very much for the time, and I would be very happy to go and discuss any question or any matter of interest to our audience. Thank you very much.
That was such an informative presentation, and I want to remind our audience that at the end of the forum, we're going to put up in our site all the PowerPoint presentations that were made during the forum. And since I have you still on it's fresh what you just gave us, we've been reading in the press that there has been a recent readjustment of the objective values. We're also reading that the government is expected to further readjust these values. Can you give us an update on this topic and on the implications for property owners?
If I can take the floor again, of course, my co-speakers, peers are more than welcome. This is true. As of May, we have a recent adjustment of the values. The areas that have been impacted are areas within the town planning, so mainly in the cities. There has been also an extension to some areas where the objective values did not apply. For specific areas, 1 out of 10, the increases have been more than 50%, but still the overall understanding is that the prices are still lower than the market value. The significant difference between market value and objective value still applies in urban areas. So in areas on islands, in areas outside the city planning, you would see that the differences, you may find a market value of 1 million and a statutory value of 50,000 euros. And this is a topic that the government considers. The adjustment of values for urban areas is within the plans. And I think that digitalization would also serve as a tool for the assessment and monitoring of market values based on contracts that are being concluded. Nevertheless, following the May increase, you will find that all the notaries are heavily occupied until the end of the year, because actually the new values would come into force as of January 1st.
Okay, I have a question for Mr. Kormas. When the question is, when all the real estate that has been sold to the funds, foreign funds, domestic funds, when all this real estate hits the market, what would be the impact on the valuations of the real estate properties? Could the market be flooded with supply and see prices drop again?
An excellent question. Allow me first to start with a small remark on the objective values that we just touched upon. Very, very well by Mrs. Allamani. I would like to add on that and connect it to what I said in my first statement. Given the fact that we still have a very shallow market, it was necessary to create this artificial, because we are talking about an artificial value, this αντικειμενική αξία, it is actually an artificial value, and it is the second best guess in order to assume what is really happening during a contract. We all know that unfortunately, not the real transaction prices are always displayed in the contracts signed upon the contracting partners. And this is not obviously something that only happens in Greece, but elsewhere as well. But in the absence of a digitalized bureau that would record all that and give you a good idea, of what the real price level is in certain streets, blocks, or cities. This is an approach to come closer to reality. We have experienced huge differences between objective values and real values in both directions, some of them being overvalued or undervalued. Now we are converging towards correctly reflecting the economic reality. I just wanted to have this added to the objective values. Coming back to the funds or similar, yes, indeed, and as I already said, the financial crisis that did begin as a sovereign crisis ended up being a banking crisis at the end as well. And this is because the Greek economy and the Greek banking system up until then had an easy approach towards lending. There were no exotics or similar in the Greek financial market of back then. So only if you had a real estate, a piece of real estate asset, then you were entitled to put this as a collateral and get a loan, a credit on that. As of that, when things got rough, almost every second loan went red. So we had among the European Union one of the highest, if not the highest, non-performing loan number, almost 50%. All banks, including our group, are now moving in a single-digit number of non-performing loans, with the aim to have it reduced in the lower end of a single digit in the next year, which is a huge exercise, and it really one of the most difficult I have ever experienced. But nevertheless, we are there, and the reason we manage that is through bulk sales of either the servicing of these non-performing loans with the corresponding collaterals underneath them, or by direct sales of pure real estate to them. The question that you gave me before has actually been the main debate in the past as well among banks, because if you consider the 4 systemic banks that are now shaping the landscape of the Greek banking system, were actually the ones who were owning all these loans, collaterals, or real estate up until recently. Moving back and trying to assume the position of the funds that are now possessing this very same bulk of non-performing loans with collaterals or real estate, I can say the following. There is a logic behind avoiding throwing all this real estate in one go in the market. And here we do have, again, the very same problem of the depth of the market. If you try to reroute an entire river into a pipeline that is only 1 inch wide, it is impossible. So everybody knows that. And accordingly, the investment plan of these funds is following. There is another aspect as well, which is the following. In order for these real estate to reach the market, as they are mainly in the form of collaterals to a non-performing loan, they first need to go through a foreclosure process. Lucky us, and this is again a credit to the current government and the improvements that have been made in the institutional framework and the juridical environment as well. This time to sell is expected to be reduced compared to what has happened in the past. All this together do give you, I hope, an overview of what is going to happen. So In the same time, we do have some impediments in creating real estate assets through the foreclosure process. Those are slowly being removed, which is something in the right direction. Obviously, there is still the protection of the weakest members of our society, as with regard to the first housing and so on. And here it would be of an advantage to mention the new bankruptcy law that is yet to be applied, which is a very interesting approach as well. So, as I already said, I don't expect huge numbers to reach the market. And if so, we do still have a way to go up until we reach the level of prices that we did have before the sovereign crisis that I mentioned, and which started back in 2008. So there is sufficient buffer there to absorb additional entities, real estate entities on the market.
Okay.
So
we're running out of time. I have so many more questions to ask you, believe me. Maybe we should do another conference just on that subject. I'm gonna just ask a quick question to Mr. Filiopoulos, and if he can answer me maybe in 1 minute, because we really are over our time. I just want to say that for many years, there is a bitter taste left to a lot of investors who came to invest in Greece because of the bureaucratic procedures and everything processes. But we are all aware that there's been a lot of progress for structural reforms, automation of procedures, and several laws that were introduced for transparency and even expediting the process through the bureaucracy. So do you feel confident that Enterprise Greece can help solve all these issues that kept the investors away in the past? In 1 minute, please.
Well, I do believe that, as you very well said, the country has improved tremendously, and the public administration has improved via these reforms, especially the past 2 years. And we see this in the companies that have decided to invest in Greece, multinationals like Pfizer, Cisco, Microsoft, Amazon. Yesterday, it was announced by the Prime Minister. I think that this is a strong indication of the changes that have taken place. And well, if these companies that I just mentioned decided to trust Greece and invest in Greece, I think that this is a great example that of how we can help other investors as well, Greek Americans, American investors of smaller size, not as big as Microsoft or Amazon, to help them invest in Greece in a safe environment and get very good returns on their investments.
And I read a lot of very positive comments in your site from people that you have helped already. I have to say that. So you are now the one-stop shop for investors in Greece. This has been such an amazing panel. We're running out of time, but we're certainly coming out of this panel wiser and most informed about the real estate market in Greece, the tax considerations, and the willingness of the government to provide this one-stop shop to expedite the process. Mr. Kormas, Mr. Filiopoulos, and Ms. Allamani, thanks are not enough. We are going to...
Thank you.
Thank you.